Welcome, everyone, and thanks for tuning in. I am Rachel Dyson of the Dyson team. I have been in real estate for about 7 years and absolutely love what I do, and I have a passion for it. I have welcomed John Lamberg of Cross Country Mortgage to join us today to sort of myth bust all of the things that buyers ask and kind of explain to us the yeses, the nos, the whys, and the how-tos of the lending industry. So, John, thank you so much for being here. Would you share a little bit about yourself?
Yeah, thank you. I really appreciate being here and have the opportunity to speak with everybody. My name's John Lamberg with Cross Country Mortgage. I've been in the mortgage industry a little over 25 years. It's a passion of mine. I love nothing more than to help people secure a mortgage, which is typically their largest financial transaction they're going to make in their life. So it's real rewarding to be able to help people do that. And with the amount of time that I've been in the industry, I've had the ability to work for a couple different types of companies. I've learned a lot during my time because there's three main types of ways you can get a mortgage. You can get them through a direct lender, a mortgage broker, or a bank and credit union. And fortunately, during my time in the industry, I've been able to work for all three different types. So I kind of knows the pros and cons of each. And I'm really excited that I'm with Cross Country Mortgage right now. We're a direct mortgage lender. And it's my favorite way to originate mortgages. So it's great as far as customer service and things we can do to help clients purchase their first home.
Absolutely. Well, thank you so much for being here.
Thank you.
So let's dive right into this myth bust. I would say my number one question I get from buyers is, do I have to have 20% down to buy a house?
You do not. There's four main types of mortgage products out there. You have your conventional mortgage product, which most people think you have to have 20% down. Typically, you can get in for 5% down. However, conventional loans do have a 3% down payment option. There are some income restrictions where you can actually make too much money to qualify for that, but there is a 3% down conventional option. Most people go with 5%, but of course you can put 20% down to avoid paying monthly mortgage insurance. You have a VA mortgage for veterans. So if they are qualified for veterans benefits, they can do 100% financing with no money out of pocket for down payments. You have your FHA mortgage loan, which traditionally requires a 3.5% down payment, which is good and utilized by a lot of first-time home buyers. And then you have USDA mortgages, which can also have 100% financing. The thing with USDA loans is they're restricted based off of your income, so you can actually make too much money as well to qualify. And they also have some geographical restrictions, so you have to be in an approved USDA area. And most of Citrus and Marion County are in approved USDA areas. So as long as you don't make too much money, you can qualify for 100% financing with that program as well.
Okay, that's awesome. Very educational. Great to know. Question number two, and something I also get asked very frequently, and I feel is your first question that you get when you get on the phone with these people is, what's the interest rate? What is my interest rate going to be with you? And I'm going to shop around to find the best one. How do you approach that?
The interest rates have been somewhat stable, meaning you've got a certain rate for a certain amount of time, and every lender, bank, or broker are all pretty similar. So it made sense to shop around and see if you could get an interest rate that was maybe 1/4% or 1/8 of a percentage point better. But in today's market, there's so much turmoil going on right now that literally interest rates are changing on a daily basis, either better or worse. So you need to make sure you work with a lender and a real estate agent that can explain why the pricing is where it is today, and also give you some idea of what things are going to happen maybe the next day, the next week, the next month. Literally, we can see pricing change by the hour in today's market just based off the economy and things that are going on. So it's real important to work with people that can explain what the current situation is and what to expect moving forward.
So our third question that we get very frequently between real estate agent and lender is, what do you offer for whether it be a first-time home buyer or some sort of a down payment assistance program? And do those programs exist, and what do they look like?
That's a great question. And yes, there are a lot of different down payment assistance program options available out there for people. The important thing to remember is to make sure you do your research as far as the specific programs and make sure you work with a lender who can educate you on what's the best option for you.
Okay.
Probably the most talked about program out there right now is a HEROES program, which is dedicated for nurses and firefighters and policemen and that sort of thing that are deemed heroes. And it's a wonderful program where you can get up to $25,000 off your closing costs.
Wow.
So it's a real hot topic right now. But the thing that people don't understand is each down payment assistance program has its niche pros and cons.
Sure.
And the thing that I always try and explain to people is make sure you understand the parameters of each of the different down payment assistance programs. For example, the Heroes program, what most people don't realize is that that down payment assistance is not forgivable. So what I mean by that is, let's say you borrow $25,000 off your closing costs to buy your house. Well, whenever you pay that mortgage off, you've got to pay back what you use for down payment assistance. So for that Heroes program, for example, if you took $20,000 and then you look to sell your house in a year or two, you've got to pay back that $20,000. Or the other thing that a lot of people are thinking about today is possibly refinancing their mortgage once interest rates drop, potentially maybe earlier or later in this year. Let's say you borrowed $15,000, $20,000 for down payment assistance and you want to refinance in 12 months, pay back that money on that Heroes program.
Oh.
So you're not going to have any equity in your house to refinance.
Wow.
So while it's a great program to help a lot of people get into their homes, you want to make sure you understand the intricacies of each down payment assistance program to make sure, do I need to pay this back? Is it going to be forgivable after X number of years? It's important to educate clients on this and everybody have a full understanding so that you don't get stuck and all of a sudden you can't sell your house or refinance down the road.
Absolutely. And I feel like that's where full transparency comes through and, just total communication, because from step one, you need to know what you're getting into for the time being, and then what your future looks like for that loan, whether it be a refi and or a resale. So that's very important. So I would say another hot topic with the loan process, and a question I get asked quite frequently from buyers is, what do I have to ask the lender? What does that first call look like? And I feel like a lot of them have this false pretension of that first call, and they're very afraid to make it because they just feel like they're going to get locked into something and they're not quite sure where to start. So when you get a buyer on the phone for the first time, what does that call kind of look like?
I think every mortgage person can treat it differently. But to me, the first conversation is probably the most important conversation, because what I got to do is I've got to make sure that I make the clients feel comfortable with me and build some rapport, because the most important part of the entire process is communication. And if you don't communicate well and people don't trust you and have rapport with you, then it's not going to be a fun, easy transaction.
No.
So I always want to find out, what's the buyer's goals? What are their needs? Explain the process to them, explain and set the right expectations, and get to know them a little bit so there's a comfort level not only with them and me, but also with them and you. Because obviously if a realtor is referring me to one of their buyers, if I don't represent myself very well, I'm not representing the realtor that referred them to me.
Right.
And that's just as important, because we're all part of one transaction and we've got to make it as easy and seamless as possible.
Right. We all have the same end goal, and that is to see it to closing and make sure that that buyer and that client is happy and we have over exceeded their expectations. So what would you say after you have completed that first call and they're happy with you and you've built that relationship and you're ready for step two? What does the buyer and or client need to prepare for you to make it go smoothly from this point forward?
Well, when they're ready to see if they can get pre-approved for a loan, what we would do is we would have them fill out our online application. It's a really simple process. It's just a question and answer application. It takes 5 to 10 minutes to do. And then the nice thing about it with technology today is we have the ability right then and there, if they choose to, where they can upload financial documentation into the application system.
Okay.
So they can upload things like their pay stubs or their W-2s or their bank statements in a secure portal where they don't need to worry about, scanning and emailing or faxing things if they need to. So it's a nice, secure portal and simple process where they can do everything there up front. But we'll have that conversation together and we'll try and figure out what we would potentially need for them so that they're able to do that in one spot in one location. Because the more I can ask for up front and they can provide to me up front, then the less we have to chase and do things later on.
Right. Let's speed up the process, make it a little bit easier for everyone along the way. What would you say is a good timeline for people to expect, regardless of the loan type? How quickly can you see things close?
Loan in every scenario is a little bit different because there's a lot of variables involved. I mean, we're dealing with a different title company, a different appraiser, a different inspector, a different seller. So every transaction is different, but I mean, I've gotten loans done from start to finish in a week or so.
That's awesome.
That's amazing. It's not the expectation. We can usually, if everybody's proactive and works together, we can get things done in 2 weeks, 3 weeks. Most contracts today are either 30 to 45 days long in most cases. So, if we work together, there's nothing better than getting a loan approved in 2 or 3 weeks and then going to everybody and asking if they want to close early.
Yes, absolutely.
If we have to sit and wait for another week or two, that's fine. But that's my favorite call I make, is calling a listing agent and saying, we're approved.
Let's do this.
Let's close if your seller's ready. That's
Yes.
a good call to make.
I love that. That's great. So, an inevitable part of the loan process is an appraisal, something you just kind of can't get by. And I feel as though buyers aren't always very aware of what goes on behind the scenes to order the appraisal, what it looks like once they're out there, what they're doing, and when they send that report back, and what does that mean? What does that mean for the loan? What does that mean for the client? And is an appraisal always necessary, or can you get a said waiver? Could you?
What a lot of people don't realize is some loans you're able to avoid having an appraisal done. And the key to that, there's a couple factors that go into this. Number one is most lenders, what we'll do is we will run the loan scenario through basically the government's online underwriting system. And there's a little trick that I don't necessarily want to give away, but when we do that, if we enter the property address, all homes, their zip code has an additional 4 numbers to it, which no one knows what those other 4 numbers are. But the key to it is when we run the loan through the online underwriting system, if we add those additional 4 numbers for the zip code, that allows the government entity that we're running the loan through to internally look up the value of that property.
Oh.
And if they look up the value of the property and they agree with it for what the purchase price we have listed, we more than likely will not need to have an appraisal done. The problem is that most lenders who do this, they either don't put the 4 additional digits in, or they don't run the scenario through the online underwriting system up front. So they don't even realize that they can get an appraisal waiver. Appraisal waivers are wonderful because, number one, it saves the client money. They don't need to pay for an appraisal. Number two, they know that if the government's saying the house is worth what it's worth, it's worth what it's worth.
Exactly.
You know what I mean? They're not, the government's not going to agree with the value if it's not there. So I've actually been seeing a lot of appraisal waivers lately. Part of the reason for that is when COVID hit, values increased so much. And things have settled down a little bit recently. So we don't see the huge appreciation, but the values are still there, meaning that the homes that have sold in the last 3 to 6 months are still carrying value. So a lot of sellers have dropped some of their prices, but the value is still there. So that's how we're able to get a lot of appraisal waivers lately.
That's awesome. Do you feel as though this appraisal waiver is also saving time and moving you to a closing quicker?
It absolutely saves time and money because obviously the buyer doesn't need to pay the money for the appraisal, and we don't need to wait a week or so or however long it takes to get the appraisal done. Now, can I guarantee that everybody's going to get an appraisal waiver?
No.
Absolutely not. But it's key to make sure you work with a lender who does the due diligence and at least tries to do that up front at the point of contract execution so that we know right away. And that's a great call to make to somebody is, hey, you know what? Your value's there. We don't need to spend the money. We don't need to waste time having an appraisal done.
Exactly. And how great would that feel as a buyer to just, be told, hey, your value's already there.
Right.
You're not paying overprice. It's
the one key to this. I've had a lot of appraisal waivers lately. Even if you get an appraisal waiver, I still recommend having an inspection done.
Oh, for sure.
Now, we as a lender, we don't require inspections. Quite frankly, I don't want to see them. I don't need to see them. But I have had a couple instances recently where we got an appraisal waiver and the client still got an inspection done, and we found some issues where we ended up backing out of the loan, which was smart. One of them had to do with a foundation issue.
Oh, yes.
We thought this was great. We don't have to have an appraisal done. And if they didn't get an inspection done, they were buying a house that needed $35,000 worth of work on the foundation. So it's still important to get inspections done, even if you don't have to have an appraisal.
Yes, it is. Absolutely. Now, what exactly are appraisers looking for? Because I know it differentiates between loan types with what may be flagged. That's the big word, right? It was flagged on the appraisal. What are they looking for, and why are they flagging such of things?
Yeah, so when we get an appraisal report back, you're going to see it basically the value given in one of 2 ways. The value is going to come back either as is, which means that the house is worth, let's say, $350,000 as is, meaning there's nothing wrong with it.
Okay.
Or we can get an appraisal back, the same appraisal that could say the value is $350,000 subject to the completion of following repairs.
Okay.
and the appraiser may say, okay, there's some wood rot out back on the side, or they need new flooring, or there's an electrical issue or plumbing issue or roofing issue or whatever that is. So we always want to see an appraisal come back as is. If it comes back subject to, that means whatever the appraiser stated needs fixed has to be fixed prior to us being able to close our loan.
Okay.
And that in turn means we've got to go back to the seller and negotiate and see if they're willing to fix those items.
Now, is that only on certain loans, or is that even on a conventional loan that these repairs need to be made?
Great question. So it can be on any loan.
Okay.
Do we see it as much on conventional loans? No. And the reason I say that is when an appraiser goes out, they have to, there's different reports they do. For example, there's a difference between a conventional appraisal and an FHA appraisal. So an FHA appraiser is going to take a little bit more time and dig in a little bit further into the property and its condition. So conventional appraisers are a little more lenient. They don't look at all the nooks and crannies and scratches and dents and everything. FHA appraisers dig a little bit further into it. So yeah, to answer your question, it depends on the loan program. It also depends on the appraiser.
Okay.
I mean, we can send 10 appraisers out and we're going to get 10 different values and 10 different conditions. It's very subjective. So it just depends on the appraiser and the property on how things turn out.
Okay. That's very insightful. Thank you. Thank you for that. Another major concern, and something that I hear from my buyers quite often, is interest rates. They're afraid of them. They're rising. What would you say? What happens if and when they decide they're going to go ahead and get this loan and lock themselves into a current interest rate? What if they wanted to refi in the future? What does that look like, and is it helpful for them?
The volatility of the market over the last 6 to 12 months has been amazing. I've never seen anything like it in all my years in the industry. The forecast and the hope is that we should continue to see interest rates slowly decline the rest of the year.
Okay.
Now, there's some things that can happen that can prevent that from happening, but we do predict that interest rates are going to drop through the remainder of 2023.
All right, so John, we're days away from closing. What can a buyer expect from you, and what do they need to be prepared for?
Key things that have to take place in order to close on a mortgage. The first thing is that we have to provide the buyers with what's called a closing disclosure, or a CD. And we're required by law to send that to them at least 3 business days prior to closing. And that closing disclosure is going to have all the final figures on it. So you're going to know the exact payments you're going to be getting, how much money you're going to need to bring to closing. You're going to know that at least 3 business days before closing. So that's the first thing that has to take place. Once we get that closing disclosure signed, then our closing department and the title company will prepare the final closing documents. Now, a nice thing we do at Cross Country Mortgage is we do electronic closings. Back in the day, most people who bought homes years ago, you think that you go to closing and you sit there for 2 hours signing away your life, and there's a big stack of closing documents. That's still the case for some people. What we do is electronic closing. So we send you about 75 to 80% of the closing documents the night before closing, where you can review them all. And then first thing in the morning, the day of closing, we send them to you again and you can electronically sign them. It's literally going to take you 5 minutes to sign them. So when we go to the title company to do the physical signing, there's only a handful of documents you need to sign. I've literally been at closings at the title company that have lasted 10 minutes.
That's awesome.
Historically, you go to title and you're there for 2 or 3 hours.
Easily.
Your wrist is sore. So technology's allowed us to move the process a lot more smoothly and efficiently, where we can have you electronically sign a good portion of the documents and then just have to sign a few physical things. And actually, we're working on, and the country's working on, making it so at some point, probably in the near future, everything's going to be electronic.
That's got to make it so much easier for buyers and alleviate some of that stress going into closing day, and all of those emotions leading up to it. So what a great feature that the company offers for your clients.
Yeah, it's great. And I love that we send them the documents the night before, so they can, if they choose to, they can spend hours reading everything. Where in the old days, you'd get to the title company and they would just throw things in front of you to sign, and you didn't have an opportunity to read everything.
No, you just almost felt obligated to just go ahead and move those papers along.
Right.
That's great.
Yeah.
What a great feature.
Another important thing is we're going to make sure that we send you the final numbers based off that closing disclosure well in advance, and the title company is going to send you wiring instructions so that you can wire the necessary proceeds for your closing the day before.
Okay.
So you don't need to worry about it the day of closing. So it's nice so that when we get to closing and we get to the title company, Our money's there, your money's there. So as soon as we're done signing, our loan funds, they hand you the keys and we're out the door. We don't
Buyers
need to
get
wait
keys.
anything.
You
Yeah.
don't have to wait for
We
anything.
don't need to
Yes,
wait
you're
for
moving
anything.
in same day.
Yep.
That's incredible. That's
Yeah,
awesome.
that's great.
So, John, thank you so much for joining me today. It has been so educational, and I'm sure our viewers got quite a few tips and, like I said in the beginning, some myths busted. So, thank you again. We really appreciate your time and you being here.
Yeah, I appreciate the opportunity. I love nothing more than to talk about mortgage and the real estate industry. And again, I think the entire process of buying a home is all about communication. So, any prospective buyers out there, they just got to make sure that they have a comfort level and are ready to work with together as a team with their real estate agent and their mortgage lender. And if everybody works together, it doesn't have to be a difficult process. It can be a fun, rewarding process with not a lot of stress and a nice, seamless transaction.
Thank you, everyone, for tuning into our Real Estate Real Talk, and we will see you on the next one.